This is the only game I play, but today we will talk about a company in the gaming industry, not this type of game, video games, GameStop. Why I'm interested in this company suddenly is because Michael Burry has been investing in this company, and recently I made a video about Michael Burry, his opinion about the bubble in passive investing in the ETF in index funds. And in that interview, when he said there is a bubble in the ETF index fund market, he also mentioned that he has been buying shares of GameStop lately. And I had a look at the latest 13F forms that he has been filing, and there is no GameStop actually there. It means he has been buying GameStop only in the last 2 months. So, and he has been buying many shares of GameStop because he sent a letter to the board of directors of GameStop telling them that he owns more than 3% of the company. So why is he buying GameStop? This is what we'll look at today in our video. We'll make our own analysis of GameStop. It's not because he's buying GameStop that we should buy. It's not because he was right in 2008 about the market, about the housing market, that he's right about GameStop today. So we'll make our own analysis. If you want to have a look at the whole analysis of GameStop, it's available on my partnership completely for free. I'm giving you this analysis for free. There is also an analysis about Z-Chain Mining Corporation for free. These two are available for free, but if you want to have more, you can always subscribe. What exactly is GameStop? GameStop is a retailer specialized in the gaming industry. So they sell gaming hardware and software and other related products. So they sell consoles, they sell video game software, all these things. And they sell this in 14 different countries through 5,800 stores. So it's not just GameStop here. They own several brands, including EB Game, Micromania, Think Geek, and also a Game Informer magazine, which is the best-selling gaming-related magazine in the world. So they are quite a big company, and they have a monopoly. They have a moat. There is no competitor competing directly in that industry with them. Of course, you may tell me there's Amazon, there is also Walmart, there are other companies which are selling video games and consoles. It's true, but they are not dedicated to only gaming. They sell other things. But now if you want a company dedicated only to gaming, there is only GameStop through all their brands. And because of all these brands, they have a lot of intangible assets. We'll talk more about that when we'll have a look at the balance sheet later. But for now, let's look at the revenues and also the earnings of the company. If you look at revenues, they have been falling. Last year, they had $8.3 billion in sales. But in 2014, they had over $9 billion in sales. So we can see that there is a drop in revenues. And last year, they actually lost money. They had a negative net income. Before that, they were making money. But as revenues was going down, the net income was also going down. All their margins are staying at the same level. So it's not because the revenues are going down that they are losing much more money. No, they are losing money because revenue is going down. So they cannot sell their products anymore. And why can't they sell their products? It's mostly because of competition. I told you about Amazon and Walmart, but there are other competitors. And the internet itself is a sort of competitor, because now those consoles on Xbox or even on any Sony PlayStation 4 are all the things you can buy on the internet, the games. You don't need to actually go to the physical location to GameStop to buy the CD anymore. You can buy from the internet, download directly from the internet. Any video game, most video games, it's like this. This has been reflected in the stock price, because if you look at GameStop stock price today, it's a falling knife. Then why Michael Burry is investing in that company? To understand that, we should look at the business segment. Because so far, it seems that this company is going bankrupt in the coming years. It's just like any retailer. There's Amazon, Walmart, the only two which seems to be remaining, and the others are going bankrupt, maybe. But if you look at the business segments, there's something interesting. Right now, they're making most money from selling software. And this also has the highest margins compared to hardware. But online, they are not selling that much, but even if online has the highest margins of all the business segments. About 30% of the sales come from software and 21% come from hardware. But there is something we should be talking about. When was the last time Sony or Microsoft or Nintendo had a new console? Nintendo had its last console in 2017. while Sony and Microsoft, they had the last one in 2013. Therefore, there is no reason for anyone to buy a new console. That's why many people are not buying those consoles, because why would they buy the new console? They already have the last one. If you have a PlayStation 4, you already have it. When the PlayStation 5 is going to come up, then you will buy it. If you have the last Xbox, you already have it. It's not like the iPhone, you have a new one every year. It's not like that. And even the iPhone today, people are spending more and more time on the same iPhone. They're not buying, they are not upgrading to a new iPhone anymore. They're upgrading over 3 years now. So it's the same thing for the console industry. And when are Microsoft and Sony, the two largest players, coming with a new console next year? So that's one of the reasons why Michael Burry is investing, because he expects sales to be increasing next year. And when these companies are going to sell these consoles, many people are going to buy these new hardware from GameStop and also the software, because both Microsoft and Sony has said that their new console will still have a disk drive. So it's not just online. It's not just that you're going to download online. You are still able to buy the DVD or whatever. And I had a look how the new consoles in 2013 affected the sales, the hardware sales of GameStop. I had a look at the 10K and the 10Qs from 2013, 2014 and 2015, and everything, all the information, important information from these are on the partnership. If you want to learn more, you can have it for free there. So what I learned from this is that it's true, there is more sales when there is a new console coming. So if this is going to be repeated again with the new consoles coming next year, in 2020 we can expect a higher sales compared to the current amount that GameStop is making. And when sales are higher, of course, net income will be higher. So if this is the opportunity to take, you need to invest in this company. Before we go further, we need to look at the balance sheet, because it's no use to invest in a company if we are paying too much for it. And there is something very interesting on the balance sheet. If you look at the balance sheet of the last 10Q, you will see that there is no goodwill at all. Like, goodwill is zero. They had an impairment of goodwill. What does this mean? Goodwill is actually intangible assets. So if a company, let's say, has a market cap of $400 million US, but the goodwill is $700 million US, it's impossible. The goodwill should always be lower than the market cap. It's the accounting rules. That's why they had to do an impairment of goodwill. So over the last year, they lost $1 billion US in goodwill. It's just lost like this. But like I told you earlier, they still have those brands. They still have those brands. They have the best-selling gaming magazine in the world, and all of this is important intangible assets. Even if it's not shown on the balance sheet, that doesn't mean that they don't have any intangible assets. This is only accounting principles. The average gamer who is going to buy this gaming magazine, he or she doesn't care about goodwill. He or she cares about the brand, and the brand is still here. It's not because the balance sheet is telling you that the brand is zero, that the company has a zero brand value. So you should always be careful with that. Another important thing to note on the balance sheet is that they have $475 million US in debt, which they have to pay before 2021. And they have a revolver option. I've talked more about the revolver option in the partnership. You can have a look there. The revolver option is basically a credit line option that they have, but I don't think they will need to use it. If we look at their cash position, they have enough cash. They have enough cash to pay that debt in 2021, and they have enough cash, according to Michael Burry, to buy back their shares. Actually, they initiated a $300 million US share buyback program a few years ago. And out of this $300 million, they already bought back $63 million US of shares. And that's why Michael Burry is telling that they have to buy all the shares right now. He is acting as an activist investor. It's what usually you would find Carl Icahn doing, investing in a company and trying to change the decisions of the board of directors, the management of the company. But right now, Michael Burry is doing this. It's the first time actually he's acting as an activist investor. But for me personally, as an investor, I don't have enough shares of the company to force them to buy back their shares. I cannot do this. Carl Icahn, like I told you, for example, he did this with PayPal and eBay. He forced eBay to sell PayPal. So he has been doing this, and now Michael Burry is trying this. Maybe the company will listen to him and buy back more shares. So we don't have this power. We don't know what will happen. If we are going to invest in the company today, maybe we should just ignore this, because it's beyond our control, and I like to have control when I'm investing in a company. So what should we consider is, if we discuss this share buyback program, if the company is at a good valuation today. I have made all the calculations. You can have it on the partnership, the detailed calculation. But for right now, let's assume, I'm just telling you, the company is going to have $200 million of free cash flow every year for infinity, and they're not going to grow anymore because of the competition they have. I'm assuming they're not going to grow anymore. And I've took the worst case scenario, $100 million of free cash flow. If not 200 million, so 100 million $. In both scenarios, the company is at a discount today. This company is the prime example of a cigar butt. What is a cigar butt? This is something that Benjamin Graham, the mentor of Warren Buffett, talks about a lot. Even Warren Buffett, in his partnership years, was buying many cigar butts. So a cigar butt is actually a company which is at a very low valuation compared to its intrinsic value. If we look at the GameStop today, they have more cash than their market cap. They have a greater book value than their market cap. So these are reasons why you would think that it is a cigar butt. So if you are going to buy a cigar butt, most of the time it's not going to be a company which will be successful in the long term. But in the short term, you can make a quick money on this. And over the next year, I'm seeing a 35% gain on this. So if I invest $100 today, I can make $35. So this is what I'm seeing over the coming year for this company. But now if you ask me about the 2021, 2022, I'm not sure about the future, this long-term future of this company. So this is the prime example of a cigar butt. And I've already bought some shares of the company because right now really it is undervalued. And I'm just looking for a 1-year investment in the company. After it reaches that 35%, I'm going to sell, because I don't see this as a good long-term investment. But now, if Michael Burry, if what he's trying to do succeeds and the company buy back shares, then we can make much more money on this investment. The company, the stock price can even double or even triple in the next year. So this is a company I'm following very closely. I've been buying shares. That doesn't mean that I'll put all my money in that company, because it's risky. There is the possibility the company is going bankrupt in the next years. So there is always this possibility. It's risky. This is a cigar butt. So let me know in the comments, what do you think about GameStop or about cigar butts? If you have more questions about GameStop, please check my partnership. You will have more detailed analysis of GameStop there. And I will make a video about GameStop later, telling you exactly why I bought. Because here I made just the overall analysis of the company. I did not talk much about the valuations. I will talk more in another video about all of this. So thank you for watching this video. Please watch these 2 videos here if you have missed them. Please like, subscribe and share. Have a nice day and goodbye.